Hello, friends, and welcome to my daily update. Well, I'm no longer calling it the war and market because from today, effectively, the 60-day ceasefire starts, and about 30 days, the Hormuz should be cleared. So let's no more talk about the war and let's talk about the daily market. I've given it a new name, and you'll come to know when I put the label. But thank you for all of your suggestions. You're very valuable in helping my thinking process. Well, today's market. Big impact was the IT because of the Accenture's disappointing guidance and a lot of announcements. When I do my write up for the day, I will cover that. Please do remember to read my post on my YouTube channel or my Facebook page. But as a result, IT corrected massively, almost 4% down today, and dragged down the large cap index. So, otherwise, if you look at it from an advanced decline ratio, slight change from yesterday, about 200 stocks down and 200 stocks up on the declines. So roughly equal, you can say, is the advance. 1467 is to 1533, right? So this means that broader buying was there by the non-institutional domestic investors. But then the surprise fact for today is that geopolitically everything was stable thanks to the peace deal signing. Brent crude about $1 up, almost at the touching 80, but between 70 and 80 is what is expected. The dollar index is strong at 100.8. We are from yesterday flat. US interest rates are also flat at 4.4. Indian interest rates are also reasonably flat at about 6.7, 6.8. So geopolitically nothing happened except for this Accenture result which dragged down. But the surprise data, on which I will just tell you the data, it's probably something which I cannot explain right now, but maybe when I do my write-up and I look at the F&O data, which I told you comes much later, but I'm trying to live up to my promise of giving an early update on this, is that FIS today bought almost 5,000 crores worth of stocks, and DIIs, surprise, sold 1,100 stocks. Now, a puzzle hard to explain. Now, since IT was the major sector correcting, is it that the DIS sold IT? Very unlikely, but that's the way. And what is this? FIS 5,000 crores. What did they do? Did they not sell IT, and where then did they buy? Or two answers to it. One, they must have covered shorts massively, which when I do the F&O, there might be a clue. Or second, there was a recovery in IT because it was much down much earlier. Late afternoon session, it recovered. So did the FII step in and do some value buying in IT? Well, I don't know the exact data, but it's a very, very puzzling data today in terms of the flows part of it. Apart from that, the broader indices, if you take the Nifty was obviously down 64 basis points, but the mid cap, small cap and micro cap were all following the week's trend, which is up 0.22, 0.42, 0.8, which, as I said yesterday, is roughly where the support is. Now, the interesting which I wanted to see was what is the impact of the IT heavy selling today on the large cap and the mid cap index. That's where there is some share for IT. Large cap index about 14% IT, mid cap about 5% IT. So I did that exercise quickly, and what happens at Nifty, which is down 0.64%, would have been down only 0.15%, almost flat if it was not for IT. Right, that's one takeaway. Second, the mid cap index, which is up 0.22%, would have been up 0.47% if not for the IT. So clearly, IT made that difference. Otherwise, the indices were more or less following the pattern of plus or minus 0.4, 0.5% up down. Right. So in that sense, the market is clearly settling down into a consolidating, rotating around the plus or minus 0.5% range, which we had discussed yesterday, and looks like it will continue the same. And the FII number for today alone will seek an explanation. Do wait for my post to read it when I do it late tonight or early morning once the F&O data comes. But otherwise, the situation is continuing in the same way that we discussed, and I don't expect any change. Now that I'm not talking about the war on the market and I've given a suggestion of 1%, yesterday I said you can consider 1.5%. Well, if you look at the behavior of the market, and like I said, no consistency in the sectoral moves every day, I would say that you stick to the approach here. It's not yet time for a bull run. There's nothing special because the monsoon outlook has to be waited for. The RBI interest rate based on the food prices. We have to wait for what the Fed is going to do, how is that going to impact. So a whole lot of things which are yet uncertain. So I would suggest that you continue. Like I said, you can increase that 1% to 1.5%, but still stay staggered and diversified. That's my suggestion. I will come back with your weekly review on Sunday night, Monday morning also, which will try and look at the triggers for next week in the market. Right. With that, good night for today, and look forward to catching up with you all again through my written post later tonight and through my weekly update on Monday morning. Thank you.